Everybody, welcome to today's fundamentals. Hello, Peter.
Hello.
What's new in the FX market?
Well, we had a US dollar which tended to edge a little bit lower yesterday. I would be noting that we had some conflicting messages from Fed policymakers. Let's make a start with St. Louis Fed President Bullard. He said that he's leaning towards more monetary policy tightening, and that would be implemented practically with 75 basis points rate hikes in total over the next meetings. On the flip side, we had Atlanta Fed President Bostic, which stated that he would favor only one rate hike of 25 basis points. So overall, the message is that there's still some hiking to do here by the Fed. It's questionable at which degree. So that would be the one issue. The second issue would be of interest would be the UK. We had the release of UK's employment data yesterday during the early European session. Now there were kind of mixed, but we had a tick up of the unemployment rate to 3.8%. But at the same time, we have to note that the UK employment market was able to create about 169,000 new jobs.
Mm-hmm.
And that tended to imply that there is an ability of the UK employment market to actually continue to create new jobs, and that means that it could remain rather tight.
Mm-hmm.
I would be highlighting during today's European session, early European session, the release of the UK CPI rates. Now the year-on-year headline CPI rate slowed down but remained above 10%. And that was an indication that inflationary pressures are persistent in the UK economy. Overall, the releases tended to highlight the need for BOE to continue hiking rates, and that may keep the pound supported on a monetary policy level.
Mm-hmm.
So that's more or less a positive for the pound.
Mm-hmm.
Last but not least, I would be noting also the Canadian dollar. We had yesterday the release of Canada's CPI rates. They slowed down as was expected, both on a headline as well as on a core level. That tended to more or less solidify the view that BOC most probably will remain on hold, and the pausing of its rate hikes practically is to be maintained. I would be noting also though that BOC Governor Tiff McClem yesterday made some comments where he stated practically that he expects the Canadian economy to be on a course for a soft landing. Now, a soft landing could mean that we are going to be having low but still positive growth. So we may be seeing the Canadian economy being able to avoid a recession. And overall, should there be a recession, most probably that would be a shallow one.
Mm-hmm.
So that's a positive for the Canadian dollar, in my opinion. That should be it, yeah.
Mm-hmm. And how about US stock markets?
US stock markets traded rather mixed. We had interesting earnings releases yesterday. We had Goldman Sachs, which more or less, the revenue figure dropped. But on the other hand, we saw that the earnings, the EPS, earnings per share, figure was higher than expected. Slightly, but still higher than expected. And it seems that Goldman Sachs had initiated a cost-cutting program since the start of the year. And the positive effects seem to have started to kick in. And that's a good thing. Yet overall, we have to note that the release did not exactly excite traders. It was characteristic how Goldman Sachs share price dropped yesterday. It's going to be interesting to see how the market will be behaving today about GS. I would also be noting that we had Netflix. I think it was in the after hours. And overall, though, both the earnings as well as the revenue figures were pretty near as expected. So there wasn't much surprise there. Definitely the crackdown on Netflix password sharing is a big issue for the company. And I think that's most probably going to be continued, if not intensified. And last but not least, I would be noting for today Tesla.
Mm-hmm.
It's a big company, and I would maintain my words somewhat. We have a company which practically reduced the prices of its products, of the electric vehicles, and I think that would be an indication of reduced demand. It's going to be interesting to see whether that's going to be reflected also on the earnings report today.
Mm-hmm. And how about gold?
Well, gold more or less remained rather stable yesterday. We may see some bearish tendencies today.
Mm-hmm.
And I'm highlighting this scenario because we may see the USD gaining somewhat, given that we may see also US yields being on the rise. Should that be the case, we may see the US dollar being supported. There's a negative correlation with gold, so that could put gold's price under pressure. I would also note that definitely a rise of US yields would make the shiny metal less desirable, given that it bears no interest.
Mm-hmm. And what's new regarding oil?
Oil seems to be dropping since today's Asian session, at least WTI. I would be noting that yesterday we had the release of the AP weekly crude oil inventories figure. There was a considerable drawdown, which showed that the US oil market remains rather tight, but that was not enough. I think that the strengthening USD may be the main factor putting oil's price under pressure right now.
Mm-hmm. And what's on today's calendar?
On today's calendar, we already mentioned UK CPI rates. We're getting also Eurozone's final HICP rate. Note that we have ECB's chief economist Philip Lane speaking shortly afterwards, and I would expect Lane to sound a little bit more hawkish. Should that be the case, we may see the euro gaining somewhat. Other than that, in the American session, I would be noting the Canadian data. We're getting the housing starts and the producer prices. Now, should the producer prices actually slow down, actually contract even more, that could weaken the CAD, as that would imply practically an easing of inflationary pressures further, also on a qualitative level, while the drop of the housing starts could also weaken the Canadian dollar, as that would imply more or less that there is slow demand for housing right now, and that would be bad news for the construction sector of the Canadian.
Mm-hmm.
I would also be noting for oil traders the release of the EIA weekly crude oil inventories figure. Should there be another drawdown in continuation to yesterday's AP release, that would verify that the US oil market remains rather tight and may provide a slight boost to oil prices. Other than that, we have tomorrow's Asian session, a number of Fed policymakers speaking. I would be noting Chicago Fed President Goolsbee. I would be also noting New York Fed President Williams.
Mm-hmm.
And from BOE, we get MPC member Tenreiro, which may sound a little bit dovish, and if that's the case, we may see the pound slipping. As for financial releases, I would be highlighting definitely New Zealand CPI rates. They're expected to currently tick down to 7.1% year on year. Now, the release as such theoretically could weaken the Kiwi, as that would imply an easing of inflationary pressures, but let's be honest here, dropping from 7.2 to 7.1, given the rate hikes which RBNZ delivered, is disappointing. So we may see the release, despite the slowing down, actually providing some support for the Kiwi, as expectations for another rate hike by RBNZ may be enhanced. Other than that, I would be also noting from Japan the trade data there for March. Now, the trade deficit is expected to widen, and if that's the case, we may see JPY slipping, given that the Japanese economy is strongly export oriented. And should the trade deficit widen, that would mean that the Japanese economy actually suffered even more from its international trading activities.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation for today. My name is Peter Iosif, Senior Market Analyst at IronFX. In front of your screens, you see the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame, unless otherwise stated. Now, with no time to waste, we see a US dollar which seems to be edging up during today's late Asian, early European session. It's characteristic that the index, was able to break above the 101.55 resistance line, which seems to be acting as an axis around which the price action is rotating. So for the time being, given that the price action has moved above it, let's turn this into support line. And let's go hunting for a new ultimate resistance line, namely a new R3. Definitely this peak stands out. However, I would like to see something which is wide lower, and I would be noting this level. It's a level which provided resistance here, here as well, and here as well. Some support here. So there seems to be some validity in it. And that would be the 103.95 in red. Let's readjust the chart. Let's reposition the labels as well so we get a clearer picture here. It's interesting how the USD is supported. Seems that it's getting some risk, or if you prefer, safe haven inflows. Now the new S3 is being placed at 99.80. The S2 at 100.65. $101.55. And 305. $103.95. Locking everything in. For the time being, we tend to maintain a bias for a sideways motion to continue with the price action of the US dollar index practically continuing to rotate around the S1, the 101.55 level. On the other hand, slight warning here about some bullish tendencies. Note how the RSI indicator has risen from the reading of 50. It's actually right now at 56.2. So there may be some slight bullish tendencies. Also note how the 20 moving average, the median of the Bollinger Bands, has risen, which tends to highlight the upward movement. Should the bulls take over, we may see the US dollar index rising, reaching, if not breaching, the 102.45. That would allow us also to start drawing a clear-cut upward trend line, showing us also the possible limitations of the upward movement. On the other hand, should the bears take over, I would expect the US dollar index to drop, break the 101.55, and start aiming for the 100.65, if not even actually reach it. It may seem like a long distance given the low volatility, but how the day began here in the European session, I would be highlighting also that the index was able to make such moves within 4 hours, not a day. It's going to be an interesting American session, I think, for the US dollar. Okay, let's move now to Euro USD. Feel free, by the way, to write in the comments section, in the chat box, if you would have any preferences about any trading instruments you would like to discuss on a technical basis. Now we have the Euro USD, which remains close but above the 1.0925. I would be highlighting this though. Give me a sec. So we have a clear-cut upward trend line, which continues to support the euro. On the other hand, though, I would be noting that the pair was unable to create a higher peak than this one. So there seems to be some kind of consolidation here, which tends to imply a sideways motion. It's also characteristic that the RSI indicator is near, actually just below the reading of 50. It's currently at 47, which may imply also rather indecisive market, given that the indicators past movement over the past 24 hours was around or near the 50 level. Should the sideways motion be maintained, we may see the price action breaking the upward trend line, which has commenced since the 20th of March, and that would be a signal of a change of trend. However, the break has to be clear, not just a slight shift to the right. On the other hand, should the bulls be in charge, we may see the price action rising, possibly breaking the 1.1075. A higher peak than this one would be required, and start aiming for the 1.1220. Note that the pair had similar movements in the past. Should the bears take over, we may see the price action dropping, breaking the upward trend line, breaking definitely the 1.0925, and aim, if not even reach, the S2 1.0760. For the time being, we tend to maintain a bias for an upward motion to continue, yet we highlight the risk of a stabilization of the pair, given the RSI and the pair's sideways motion over the past 24 hours. Let's have a look at GBP USD cable. Clear-cut sideways motion, no surprises here. It was expected between the 1.2540 and the 1.2350. I would like to have a look how the pound reacted to the release of the UK CPI rates during today's early European session, which were higher than expected. Slowdown, but not as much. And we know that we had a 27 pips rise at the minute of the release. Also note this, despite this correction lower, note how the pair practically climbed higher in the minute chart and slowly but steadily corrected lower once again. Still higher than what it used to be before the release. Considerably higher, around 20 pips higher. Moving back to the forward chart, readjusting it. For the time being, we tend to maintain a bias for the sideways motion to be maintained, given the tight range-bound movement of the pair over the past 24 hours, and given that the RSI indicator is running along the reading of 50, implying a rather indecisive market. Note also that the Bollinger Bands are narrowing, while the moving averages seem to have flattened out. For the time being, once again, sideways movement between the 1.2540 and the 1.2350, despite actually the price action of cable being in a very, very tight range-bound movement of around 10 to 15 pips, no more. Should the bulls take over, we may see the price action rising, breaking their 1.2540, which also serves as the upper boundary of its current sideways motion. Note how the level was tested here. In that case, we may see it start aiming for the 1.2770. On the other hand, should the bears take over, we may see the price action of cable dropping, breaking the 1.2350, which is the current lower boundary of its current sideways motion. Note the tests once here, twice here. And in that case, should the 1.2350 be broken, the next possible target for the bears may be the 1.2185, a level which was tested both to the downside as well here and here, as well as to the upside. So that's pretty valid. Okay, moving now to USD-JPY. USD-JPY, which maintains some slight bullish tendencies. Actually, they're quite good. Note the rise during today's late Asian, early European session. I would like to have a look at the minute chart to see exactly when this was happening, how it started. And okay, it started somewhere here. That was about half an hour before the Europeans started to move open, and it intensified during today's European session. So the US dollar is on the rise, that's official. Back to the H4. Should the bullish movement be underscored also by an upward trend line, I think that would look something like this. A little bit steeper. I would expect the price action to hit, if not even breach, the 135.70 by the American session today. And should that be the case, then practically the way would be paved for the pair to start aiming for the 137.80 resistance level. The RSI indicator is just above the reading of 70, implying a bullish sentiment, a clear-cut bullish sentiment on behalf of the market. However, I would also like to express my worries here that the pair may be nearing overbought levels, and that could make it more sensitive to a possible correction lower. Yet on the other hand, the price action has still some slight distance to cover until it hits on the upper Bollinger Band. Note how the pair corrected, stabilized practically after hitting right here on the upper Bollinger Band. I wouldn't be surprised to see that being repeated. We have clear-cut, upward sloping moving averages. The 100 in orange, the 50 in green, and the blue median of the Bollinger Bands, which is the 20 moving average. Should the pair decide to stabilize, I would expect it to break the upward trend line we have just shown and remain between the R1, which used to be a former support line, now turned to resistance given that the price action is below it, but also to the downside the 133.70, so that would be a movement like this. Definitely a breaking of the upward trend line would be required in order to exactly signal the stabilization of the pair and the interruption of the upward movement. Should the bears take over, we may see the price action of USDJPY dropping, breaking the upward trend line once again, signaling a change of trend. But for the beginning of a bearish outlook, I would require the pair to drop lower than the 133.70 support line and start aiming for the 130.40. Okay, let's have a look at USD the other safe haven currency pair. Another slight bullish tendency here, also a result possibly of the strengthening of the US dollar, but nothing as decisive as the upward movement of USD/JPY. So for the time being, we tend to maintain a bias for the sideways motion to continue between the 0.9020 resistance line and the 0.8935 support level. On the other hand, once again, I would be highlighting the upward movement. Note that the RSI indicator has risen above the reading of 50. It's actually right now at 58. So a sideways motion is expected, but be aware of the bullish tendencies, which could drive the pair higher. Definitely for a bullish outlook, we would require a clear-cut break of the 0.9020 resistance line and the price action to start aiming for the 0.9115. Note how the pair provided resistance here, support here, here, and here. On the flip side, should the bears take over, I would expect the price action to break below the S1 0.8935, nothing less. And in that case, I would expect it to start aiming for 0.8860 support level. Note how the level provided support here. It was pretty strong. It was able to reverse or at least hold the downward movement, the intense downward movement of the pair. Okay. It's interesting how the 50 moving average and the 20 moving average have started to converge, primarily with the 20 moving average being on the rise, reflecting far more better and accurately the recent price action given to the shorter tail it carries with it. Let's move to AUD/USD, commodity currency pair. Once again, USD seems to be strengthening. Let me readjust the levels a bit. I think that's clear. So the sideways motion seems to be continuing. That's not an issue. And we expect the pair to maintain the sideways motion between the R1 0.6755 and the S1 0.6625. Despite the strengthening of the US dollar, there's still plenty of ground for the AUD/USD to drop before changing our view. It would have, for a bearish outlook, I would require practically the pair to break the 0.6625 support line and start aiming for 0.6520. On the other hand, should the bulls take over, we may see the price action being on the rise, breaking the 0.6755, which serves as the upper boundary of its current sideways motion, and aim for the 0.6855. For the time being, let's draw what we expect. Insert, shapes, rectangle, and I would expect a continuance of the sideways motion within this rectangle here. For any break, either the R1 or the S1, that would be a first signal of a changing trend, in my opinion. Okay, let's move now to USD CAD, the second commodity currency pair. Nice upward movement, which is practically a little bit understandable in the sense that let's draw also an upward trend line here. And I think if we drill into the 1 hour chart, that will become far more visible. Here you go. Higher truths, higher peaks. Yep. I would like to go back though and have a look at how the pair reacted on the release of the Canadian CPI rates, which slowed down. However, the slowdown was primarily as expected, so the market most probably had it already priced in. So the moment of the release was, let's have a look. Here. We see a wide drop. Okay, not that wide. 15 pips, almost. Not much. Okay, but there was some initial reaction, but note how it corrected higher once again, very quickly, and maintained, I wouldn't say sideways motion, but didn't move much higher. Maybe this one, but there was a correction lower later on. It's characteristic that Tiff McClem's speech provided little, if any, movement. Let's have a look. Yep, nothing much. Okay. Back to the forward chart. Definitely we have to correct this and turn it into support line, given that the price action has moved decisively higher. I think we're talking about the level here, which was the pair's past sideways motion upward trend line. Sorry, past sideways motion upper boundary. And that would be in red the 1.3810. Let's correct the labels as well. $1.3095 is now the new ultimate support line. 1.3270 is now being placed as the second support line, and the 1.34 as the first support line. The 1.3545 first resistance line out to 1.3645 R1 R3 now being placed at 1.3910. Let's reaffirm this. Sorry, that would be 3810. Okay. Small correction here, 100 pips. That's it. So let's talk direction. Should it continue to be on the rise, I wouldn't be surprised to see the price action start aiming for the 1.3545. The rise of the RSI indicator, which was finally able to break above the reading of 50, it's actually right now at 60, is an indication that the bullish sentiment is building up. There is a catch though, and the catch is the price action seems to have hit on the upper Bollinger Band, and that may slow down the bulls. So I wouldn't be surprised to see the pair continuing to rise, yet may do so on a slow pace. Nevertheless, I would expect the pair to start aiming, if not even reach the 1.3545, should the US dollar strengthen enough. On the other hand, we have to note that on a fundamental level, a possible rise of oil prices could provide some support for the Canadian dollar. And in that case, also don't forget that we have a number of financial releases today from Canada, which may affect the CAD side of the pair. In that case, should the CAD strengthen, we may see the rise being mediated. Should the pair stabilize, I would expect it to remain just above or maybe around the S1 1.34 level. Yes, at that point, definitely I would expect a breaking of the slight upward trend line we have just shown, signaling a change of trend, that the upward motion was interrupted. On the other hand, for a bearish outlook, I would require a break of the upward trend line, a break of the 1.34 support line, in whatever order that may come, and the price action of USD CAD to start actively aiming for the 1.3270. Let's have also a look at the Kiwi. NZD USD dropping, no surprise here, in the sense that it's understandable given the strengthening of the US dollar. I would like though to change the 0.6190 into as resistance line, given that the price action has moved below it. A pair which may come under the microscope of traders tomorrow during the Asian session, as the New Zealand CPI rates are to be released. Now this is a nice show. Okay. And that would be providing the 0.5940 support line. Actually, I could go a little bit narrower at this level. And I'm noting it because here was a beautiful resistance level. Let's have a back check on this. Okay, we had another touch here and provided some support here. Seems good. That would be the 0.5890. Okay, let's readjust the chart. Let's correct the labels. Starting with the R3, which is now being placed at 0.6360. The R2 at 0.6270. The R1 at 0.6190. The S1 at 0.6090. And the S2 at 0.5980. S3 being at 5890. Let's verify the S3 once again. Yep, correct. Locking everything in. So for the time being, we have a clear-cut sideways motion with the price action revolving around the 0.6190 axis, a level which used to be providing support a number of times. The narrowing of the Bollinger Bands tends to highlight exactly some low volatility, which may more or less allow for sideways motion to continue. On the other hand, though, I would be noting that we have an RSI indicator which is dropping. It's currently at 38. So the bearish sentiment seems to be building up and may allow the pair to drop towards the 0.6090. Let's not forget also the release of New Zealand CPI rates for Q1 tomorrow during the Asian session. And should the rate actually provide some bullish tendencies, we may see the NZD being supported, reversing the slight downward motion, breaking the 0.6190 resistance line. But for bullish outlook, I would expect it to start aiming, if not even breaching the 0.6270 resistance line, a level which provides resistance here, 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 and here. Okay, a quick glance also at gold, which is dropping and has broken the 1985 support line. That's interesting. Note the RSI indicator, which has reached the reading of 30, also highlighting the bearish sentiment for the precious metal. Note that we are in the 4-hour chart, so this is clear-cut European session. Maybe a result, as we have mentioned also in the fundamentals, from the strengthening of the US dollar, but also a possible rise of US yields. Should that be the case and should the bearish momentum be maintained, I wouldn't be surprised to see the precious metal start aiming for the 1935. It would become even more interesting if we draw an upward trend line like this to show exactly how that was broken. Let's clear the chart. All these little movements here and slight trends, I think that becomes far more clear. The pair was on the rise, the upward movement was interrupted, and that was signaled by breaking of the upward trend line. And now it drops below the S1 1985, implying some bearish tendencies, which are also confirmed by the drop of the RSI indicator down to the reading of 30. Note though that the price action seems to be finding some difficulties as it hits the low Bollinger Band. But I think the bears will be strong enough to actually continue driving the precious metals price lower. I would expect this level to be the ultimate support line for now. Okay, that should sum it up from all of us here at IronFX. Best wishes for solid trading.
Today's session, we will look at swing trading. Swing trading is a style of trading that is used to capture short to medium term gains in a financial instrument over a period of a few days to several weeks. The strategy involves holding either a long or short position for more than one trading session, but usually not longer than several weeks or a couple of months. This style of trading is based on the assumption that market prices rarely move in a straight line and that traders can find opportunity in the minor fluctuations. Basically, swing trading involves identifying profitable times to enter trades based on two different types of swing lows and swing highs. A swing low refers to a major price low, while a swing high refers to a major price high. Forex swing traders generally use technical analysis indicators to determine which exchange rates are high or overbought and which rates are relatively low or oversold. Swing traders often follow trends, but they also look for market extremes to sell into highs or buy at lows when the prevailing trend's momentum is declining. They generally open positions with a time frame of a day or more, but they would generally hold a position open over a shorter time period than other trend following traders. Thank you for watching.
Okay, so today we're going to be talking about advanced RSI trading strategies. So as I mentioned earlier, I'll just be covering for Desmond for today's webinar because he isn't well today. So first things first. So I'm Melanie. I will be your speaker for today. Here's our agenda for today. Firstly, we're going to go through briefly stochastic oscillator followed by RSI indicator because RSI as well as stochastic are pretty similar in nature. So we're going to be comparing them throughout the webinar. After that, we're going to be talking about stochastic versus the RSI indicator. We're going to be seeing the different circumstances in which you use the different indicators. After that, we're going to be looking at using divergences in trading, as well as the different types of divergence that you can look out for. And lastly, we're going to be combining them together for high probability setups. And if we have time at the end of our webinar, I'll also pull out TradingView as well, and then we'll look at some live charts together and make use of RSI as well as stochastic to look for divergences or any breakouts. So throughout the webinar, if you guys have any questions, feel free to let me know in the chat or in the Q&A section. It should be working, but I will be monitoring that pretty closely. Okay, let's get started. Hi Dahiru, welcome to today's webinar. Okay, so let's start with what exactly is the RSI. So RSI stands for Relative Strength Index, and it's used to measure the strength of a security's price action over a specific period of time. So it's also commonly used to identify potential entry and exit points in the market. So we'll be going through that in a couple more slides. So the RSI indicator measures the magnitude of a security's recent price changes to determine whether it's overbought or oversold. Oh, I'm also curious to know whether you guys use RSI or stochastic yourselves when you're trading, because it's a pretty common indicator that we like to use as well. So just curious to know how many of you guys use this daily or frequently for your trading. Okay, so how exactly do you use the RSI indicator? So it oscillates between 0 and 100. So it has values above 70, which are considered overbought, and the values below 30 are considered oversold. So why is it overbought? It's because when the RSI value is above 70, it suggests that the security is overvalued due for a price correction. So it's potentially indicating a sell signal. But when the RSI value is below 30, it suggests that the security may be undervalued and due for a price rebound, potentially indicating a buy signal. So traders often use RSI in combination with other technical analysis, as well as fundamental analysis. And I'll show you how we do that later on when we move on to TradingView. But it should be noted that typically RSI as well as stochastic are not used on their own. Okay, so let's move on to stochastic. Okay, my image is covering a little bit of the words, so sorry about that. But okay, I'm just gonna briefly go through as well, because you don't exactly need to know how it's calculated if you're using TradingView or MT4, because if you just select the indicator, it's already calculated for you. But this is just FYI. So the stochastic oscillator consists of two lines that fluctuate between 0 and 100. First line is called the K%, which represents the closing price of the instrument in relation to the high and low prices of a given period. So the second line is called the D, or percentage D, and it's the moving average of the previous line that we mentioned over a certain number of periods. Okay, so how do you use the stochastic oscillator? We'll just briefly go through this. So traders use stochastic oscillator to identify potential buy and sell signals as well. So when the percentage K crosses above the D line, it's considered a buy signal. And when the K crosses below the D, it's considered a sell signal. So they also look for divergences, which we'll be looking at in a couple more slides. Okay, so now let's look at the differences between stochastic versus RSI. So the reason why we are talking about stochastic as well as RSI, even though this webinar is for RSIs, is because they are both price momentum oscillators and they're widely used in tandem. So they each have different underlying theories, but the underlying method is about the same because it's based on price momentum. So the stochastic oscillator is predicted on the assumption that closing prices should move in the same direction as the current trend. So that's for stochastic oscillator. And meanwhile, for RSI, it tracks the overbought and oversold levels by measuring the velocity of price movements. So in other words, the RSI was designed to measure the speed of price movements, while the stochastic oscillator formula works best in consistent trading ranges. So you can see in my last point, I mentioned that the RSI is more useful during trending markets, whereas the stochastics is more useful in sideways or range-bound markets. Okay, so here's just a brief image to show you the RSI and the stochastic when used in tandem. Okay, so here let's talk about hidden support and resistance. So if you've been trading for a while, you will know that support and resistance levels are really important because they could be your exit and entry levels, as well as specific strong levels of confluence to take note of that could represent a reversal or a price breakout. So over here, we have, you can see price, we have a price chart, and then we have a stochastics chart. So if you see here, the red dotted line is what we call the hidden resistance, because between each of these levels, there is a difference in the swing highs. So over here in the first column, you can see price made a higher high, whereas on our stochastics, the swing high remained at the same level. So it's a horizontal line here at the 93.52 level. Similarly, on our second level, price made a higher high. However, on our stochastic, it shows the same level. So this is what we call a hidden resistance. So here we have another example, but in this case, we have a hidden support. So the green line at the bottom of our stochastics chart is our hidden support level at the 4.2675 level. If we take a look at our price chart, at the exact same time, price is moving in an ascending trend line. How do you know it's a valid ascending trend line? Is when you have 3 significant points touching your ascending trend line. So you can see this is what we call a hidden support because the swing lows are all lining up in the same line at the 4.2675 level. This also helps us to identify the take profit, buy entry, as well as stop loss levels. Okay, let's move on. So you can see over here, okay, let me just briefly go back to the previous slide. Here we're expecting price to continue to rise from our entry to our take profit. Why? Because here on our stochastic, price is moving on a hidden support level. Even though price on our price chart is moving in an ascending manner. So you can see here, this is what happened after a couple of hours. So you see price continued to move not within the ascending trend line, but it continued up towards our take profit as we expected. Okay. So now let's move on to divergence in trading. So previously, in the previous few slides, we talked about hidden support and resistance. Now we're going to be talking about divergence. So they're both pretty important concepts to understand for RSI and stochastic oscillators. Okay, so for divergence in trading, it's a concept that compares the movement of a security's price and an indicator such as an oscillator to identify potential trend changes. So there are two main types of divergences. We have the bullish divergence as well as the bearish divergence. So the bullish divergence occurs when the security's price makes a lower low, while the indicator makes a higher low. Don't worry if you're a bit confused now. We'll be showing you a couple of examples in the next few slides. So this suggests that the downward momentum of the security is losing strength and a potential upward trend may emerge. Meanwhile, for bearish divergence, it occurs when the security's price makes a higher high, while the indicator makes a lower high. So this suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So if you take a look at the image that I've included here, we have the regular divergence, hidden divergence, and exaggerated divergence. But for now, let's just take a look at the regular divergence. What we mean by price made a higher high is when the second swing high is higher than our first swing high. That's basically it. Whereas on our RSI, on our stochastic indicator, it shows that price made a lower high. Similarly, if we have a bullish divergence, price made a lower low on our price, whereas price made a high low on our stochastic chart. Okay. Any questions so far? Let me just check. Okay, no questions. Let's move on. So we have a first example of a bearish divergence. So here if we take a look at our price chart first, you can see that we have a resistance, right? A horizontal swing high resistance with two swing highs at the 0.78145 level. Okay, but if we take a look at our RSI, we can see on this red dotted line, it's actually not horizontal and it's a descending line. So with price testing a key horizontal resistance level, which is this red dotted line on our price chart, we see a smaller high resulting in bearish divergence with RSI, because our descending resistance line on the RSI caught the past two reversals correctly, which is the two swing highs. So it forecasts that we could be seeing a reversal over here from this point over here on the 29th of April. Okay, so this is how price eventually played out. We can see because of the previous two swing highs and the reversals from this level, we can see we predicted how RSI reversed very strongly off of the same level. And as a result, on our price chart as well, it also reversed off the same level at the same time. In this case, this is a good example because we have, firstly, as I mentioned earlier, we have multiple swing high resistance. We also have our RSI resistance, which is the bottom dotted red line. And then we also have bearish divergence on our RSI. So you want to get this kind of confluence, which confirms your analysis so that your analysis is more accurate. Okay. Okay, let's move on to our next example. So for this example, we have a bearish divergence. If you take a look at the points that I've marked out, from here to here on our price chart, we have price making a higher high. However, on our stochastic chart, on the same time zone, or rather on the same time frame, price made a lower high. So this is a bearish divergence, and we're expecting price from this level on the 19th of August. After this, we're expecting price to drop, which you can see it did drop. Okay. So now let's take a look at repeated patterns. So here we have from the previous slide, this price making a lower high on our stochastic chart. But if you see later on, a couple days later, price again made a lower high. But on our price chart, you can see this sharp increase in price, and price made a higher high. So these two levels over here makes or rather a multiple swing high, you could call that, on our stochastic chart, making it a hidden resistance level. So after that, since we have this hidden resistance level, we're expecting price to continue to drop since we have a bearish divergence. So bearish divergence means we expect it to drop, and if we take a look here on this slide, price did continue to drop. Okay. So let's move on to divergence potential. So we always take note of where the bearish divergence started, as this is the level where it would tend to reverse to. So if we take a look at our price chart, this is what we're talking about, this yellow highlighted area. But if you take a look, we also have a bearish divergence, and this is noted out by the purple lines. On our price chart, price made a higher low, a higher high, and on our RSI, price made a lower high. So in this case, since it's a bearish divergence, we are expecting price to drop. And drop to where? We're expecting price to drop to this yellow area because that's where our bearish divergence started. So we drew out this vertical dotted line so that it's easier for you guys to see within that same time frame the difference in the shape of the chart that you can look out for when you're identifying bullish or bearish divergences. So here's our divergence potential playing out. You can see price reversed to exactly where the divergence started to occur at the yellow highlighted area. Let me know if you guys have any questions so far. If not, we can move on. So now we're moving on to forecasting breakouts. Here you can see price on our price chart is moving in an ascending trend line. And on our RSI, it's also moving in an ascending trend line. But if we take a look between these two columns that we've highlighted, the RSI broke the ascending support line before price did. So this forecast that price might break out of that same support line. So point 2, price is barely breaking out of the ascending support line but shows strong recent bearish divergence versus RSI. So this is a very important point to take note of because at our yellow highlighted point, right at the start of the time period that we're looking at, you can see price broke out of this support line. However, on our price chart, it didn't. So we're expecting price to do the same as well. But how do we know this is going to happen? Just from bearish divergence alone, it might not be enough to confirm this breakout. Which is why I mentioned earlier, the confluence is so important in ensuring your analysis is accurate. So point 3, we have RSI breakout as well as the bearish divergence and price breaking out, just a little small bit on the 30th of April. So with all of these confluence, we can then say that our analysis has a higher probability of occurring. So you can see price broke out and dropped strongly, exactly as how we predicted. Sumit asked if it's possible to get a live example in TradingView with gold, Euro USD. Yeah. So after I'm done with my slides, we will move on to TradingView and I'll show you guys how we can make use of RSI and stochastic on, maybe we'll use those two charts first. Okay, let's move on to the next example. So once again, this is another example of a price breakout. So if you take a look here, price is continuing in a descending trend line, or rather not in a descending trend line, but rather a descending manner. And on our RSI, it's also descending in the same manner. However, if we take a look at the RSI chart, you can see it's briefly breaking out a small bit out of our descending resistance. So the reason why I wouldn't call this a descending trend line is because it doesn't have 3 valid points. So that's why we call it a descending resistance instead. So this is a couple days later. From this point, you see a bullish divergence. Price on our price chart is making a lower low, whereas on our RSI, price is making a higher low. So first point, price is now testing the descending resistance line and we're wondering if it will break it. Point 2, descending line breakout. As I mentioned earlier, on our RSI chart, price recently broke out of the descending line. And number 3, recent bullish divergence suggests that we could be seeing a strong reversal. So once you have all of these points that line up nicely, then you have confluence that your analysis is pretty accurate. And true enough, this is exactly how it broke out of our descending resistance line as we forecasted in our RSI. Okay. So now let's take a look at a live, or rather a GIF of bullish divergence. So if we take a look at just the image first, you can see the red dotted line that I've indicated over here has made a lower low. Price is also moving within a descending trend channel. But on our stochastic chart, price has made a higher low. So this is a bullish divergence, and I'm expecting price to continue to move upwards after this second vertical line. So if we take a look at the GIF that I've created, you can see that's exactly what happened after this divergence. Price continued to move up. But what I really wanted to highlight over here is the confluence. So if you take a look here, we have a resistance line, over here at the 1.56099 level at the swing high. And I also have a Fibonacci projection, starting point here and middle point here and ending point here. And this is my 100% Fibonacci projection. So this lines up nicely with my 1.56099 level. So this creates confluence that it's a pretty strong level, and I'm expecting price, even though to continue up, I'm expecting price to reverse off of this level. And if we take a look at our GIF, you can see price tested the level many times after it broke out of our descending trend channel. Just give you some time to take a look at the GIF. Notice how it tests this level many times. And it tests this level so many times because of the strong resistance from the swing high as well as the Fibonacci projection. Okay, so let's look at bullish divergence now. Here, I'm also making use of the Ichimoku cloud. As I mentioned earlier, we typically wouldn't use RSI or stochastic indicators on their own. We'll use them in conjunction with another indicator, as well as different graphical analysis as well. So over here, you see between the two lines that I've highlighted, price has made a slightly lower low, and on our stochastic, price has made a higher low. So I'm expecting price to continue to rise. And if you look at the GIF, that's exactly what it did as well. Okay. Okay, that's it for my slides. Let me just stop sharing so that I can pull out my trading view, and then we can take a look at some charts together. Okay, so Sumit mentioned gold. So let's go ahead and start our analysis with gold. Okay, let me share my screen. Okay. So here we have our gold chart. Before we start analyzing, a good habit would be to look at larger or longer time frames of gold. So let's take a look at the monthly time frame. So this is just to get an idea of where prices are heading to, or where prices were in the recent past. So this is our monthly. This is our weekly. You can see price is testing this area over here. Okay. And we only really start analyzing on our daily, 4-hour or 1-hour chart. We don't really analyze on the 1 minute to 30 minute because there tends to be too much noise on those charts. Sorry about that. So we typically just use hourly, 4-hour, or daily time frame. So how do we decide which to use? So we typically just take a look between the 3 charts, and then we see which chart has the clearest price movement. So here you can see my 1-hour chart. The price movement isn't very clear. Oops. Compared to our daily as well as our 4-hour time frame. I think I'm gonna stick with daily time frame because you can see the clear movement in price up and down. Okay, I think we can all agree that prices are moving upwards and you want to follow the general trend of the chart. So let's see if we have so before we begin with our RSI indicators or stochastic indicators, we're going to start by graphical analysis. Let's see if we have any parallel channels or any trend lines. Okay. So we don't have any of those, but we know that price is moving upwards. So now that we have the general direction of where price is heading towards, let's go ahead and look for support and resistance levels. So your first support would be the nearest swing low to where price currently is. So price is currently at 1966. So my first swing low, or rather my first support, would be the nearest swing low to where price currently is, which is over here. So a good habit to have would be to pull back our support level as far as we can without cutting too many bodies of candlesticks. Okay, so like 1 or 2 is fine, but yeah, so 1 or 2 is fine. Sorry about that. So 1 or 2 is fine, but not too many. So the reason for doing this is so that we can see how many times price has tested this level in the past. And that also tells us how significant this support or resistance level is. Okay, so here's our first support level. Now let's pick out our first resistance level. So your first resistance level, similar to first support, would be where the swing high where that's closest to where price currently is. Okay? All right. So if we're looking for an entry position, we will look for maybe over here, closer to where current price is. At this swing high resistance here. Okay, so now that we have our support and resistance levels settled, let's go ahead and look for some Fibonacci levels as well. Okay, I can see at this level or this area, we have the 78% Fibonacci projection lining up nicely with my first resistance. So we also have kind of an intermediate resistance level here. So I'm just going to use a dotted line to take note of that. And this is also lining up with my 61.8. So you want to take note of these levels because price, we're expecting price to go upwards. So price is likely to, sorry, okay, sure. So we're expecting price to move up. That's why we're going in for a buy, right? But since we have Fibonacci levels that are lining up nicely with our resistance levels, this could mean a confluence area, and price could reverse off of these levels. So if you're heading for a buy towards the first resistance, we will wait for the price to first break out of this level here, this confluence area here, 61.8, as well as this intermediate resistance, before going in further to go for buy towards our first resistance. Okay, so now that we have our Fibonacci levels as well as the resistance and support, we can go in and look for our indicators. Okay, so here is our RSI chart. So when you have your RSI, the first thing we're going to look out for would be the general direction of price. So here I have an ascending trend line for my RSI. Okay. Next, we're going to look for divergences or hidden support and resistances. Okay. Okay, I hope this is better. Otherwise, I can close it as well. Okay, let me know if this is better. Okay, I'm gonna get rid of my 100. So for Fibonacci projection, let me just recap. We use these three main levels, 61.8, 78.6, and 100%. In this case, I can see my 100% isn't really relevant, so I'm gonna get rid of that so that my chart is clean. Okay, so let's get back to RSI. So I'm gonna highlight some areas where there are significant divergence points. So how you take note, you can use a vertical line to just see different areas and see whether the price make a higher high or lower low. So for example, over here. Okay, let me make this bigger. Okay. So we take a look over here between the two lines that I've highlighted, price actually made a lower low. But on our RSI chart, price made a higher low, if you can see here. So this is what we call a bullish divergence. And then after this point and the 27th September, we're expecting price to rise, which you can see it did rise, even on our price chart as well. Price went up and it continued going up. So that's how you look for bullish divergences. If we're looking at current price, I suppose over here would be the most recent one. Let me try and zoom in. So if you can see between these 2 points over here as well as here, price is pretty stable. It's on the same first support level. But if we take a look on our RSI, it's actually moving up. So it made a higher low. So we can expect price to continue to keep going up. So after doing this analysis, you can go in with Ichimoku or your MACD just to get more confluence. Okay, so you see my Ichimoku, price is moving above the cloud, which gives us a bullish signal. So it also gives us more confluence that price is heading in a bullish momentum. So let's try MACD as well. MACD is also moving in a ascending manner because of the green area, which signifies a bullish signal. RSI period value over here. we typically just stick to the same to the same settings. Okay, no worries. So I think I had another request for Euro USD. So that would be the last chart that we'll go through really quickly just to identify divergences. Okay, so same thing. Look at monthly first. You can see price has been dropping. Weekly, daily. Okay, on our daily chart, price seems to be moving in an upward trend for hours as well as 1 hour. Okay, I think I will analyze on our 4-hour chart because that seems to be the clearest movement in price. So let's go ahead and get started. We're going to start by graphical analysis, see if I can get any trend channels or trend lines. We typically look out for trend channels more so than trend lines because then we can see whether price is going to continue to move within the trend channel or whether it is going to break out of it. Okay, so you can see here price is moving within a ascending trend channel. Let's go ahead and plot our support and resistance levels. Over here, I have an overlap support level since we have a swing high as well as a swing low here. On my Fibonacci retracement, I can see that price is the 38.2% lines up nicely with my first resistance here. Let me just label this first support and first resistance. Okay. So this is just a very brief graphical analysis example, but I want to focus more on the RSI indicators. Okay, so same thing, I'm going to pull out my vertical line and see if we can find any divergences. Okay, I think we have one here. Okay, yes, but it is not very obvious. So here on our price chart here, it's a horizontal level. You can see the wick of the candlestick here. Right, so it's a horizontal level, whereas on our RSI chart, price is moving upwards. So price is making a higher low on our RSI, whereas on our price chart, it is staying in a support level, horizontal support level. So this is let me color it green because it's a bullish divergence. So we're expecting price to move upwards, which you can see that it did. Okay, we can see that on our RSI, we also have an ascending trend channel, whereas on our, let me pull this back. Yeah, so on our price chart, we have a support level instead, horizontal support level. Okay, let's see if we can find some more major examples of a divergence. Okay, over here we have one. here price made a lower low, whereas on our RSI chart, it has made a higher low. So you can see price did indeed go up immediately after this point, immediately after the divergence. Over here as well. So they're pretty easy to look for once you get the hang of it. And they're quite common as well. So it's important to make use of different analysis techniques together with this in order to get the most accurate analysis. So here's another one that I've just highlighted. Price made a lower low, and on our RSI, price made a higher low. And you see price shot up immediately after that. Okay. I think you guys kind of get the hang of it. Let me just see if we have any questions. Okay, so let's maybe use stochastics as well, since they are often used in tandem. So you can see, even though they both make use of price movement, there can be some discrepancies between RSI as well as stochastics. So sometimes it's good to look at both. Here we see price moving in an ascending trend line. However, price broke out of this support level. So we could be looking at a breakout. And over here as well, just now we pointed out that on our RSI, price made a higher low. However, on our stochastic, price made a lower low. So what happens if you are in this situation where your stochastic as well as your RSI don't exactly line up? Well, we have so many other indicators here to use as well. Bollinger Bands, Fibonacci levels as well, MACD, all of that. So you can pull out any and just go accordingly. So see for yourself, price moving below. So it might be giving me a bearish signal. If we have a MACD, it might show us something different as well. So it's important to get used to and see which indicators you are most comfortable using and you are most reliant on, and just trust these indicators once you really know how to use them. Okay, so before I end this webinar, let me just show you guys. So we have, we have our VIP trading room. So all of the information is on IronFX.com. You get, depending on your account types, you can get access to different services. So let me just show you really quickly what the VIP trading room looks like and the different functions that they have. Okay, so once you have registered, once you've logged on to the IronFX VIP trading room, you'll be welcomed by Desmond. And then over here in this channels column, you can see there's different sections for you to take a look at. We have the chit chat function where you can ask questions. You can ask questions about the fundamental analysis, about your potential setups as well. There are also training videos. And then we have news. So which would really help you for your fundamental analysis. So we have news every single day. And then we have the different currency charts. So here we have majors, commodities, and the different crosses as well. So it's basically like a mini trading view, but you get extra practice because you have all of the functions that TradingView has. You can change the time frame as well if you so wish. We have indicators as well. So how you create an analysis, you press create analysis, put out your analysis here. And once you have done so for example, if I say price is moving in a descending trend line, for example, let me mark it out. Oop. Okay, price is moving in a descending trend channel. Ooh. Okay, so here's the opacity. So it's highly customizable as well for your own charts. So you can indicate the directions, title, preferences. So if I'm gonna write descending trend channel, and I can highlight this, link object to text, and I just click on my parallel channel, confirm, and then I post to multiple channels. And in fact, after creating your analysis, you can tag Desmond or any one of our pro traders to ask them to check your analysis for you. So this is a really good way for you to practice your technical analysis as well. Okay. Okay, I think that's about all I have for you today. Let me stop sharing. Okay, let me know if you guys have any other questions. Thank you guys so much for coming today, and I hope you guys found this helpful. And I will see you guys maybe next week. Desmond should be back by next week though. So I'll see you guys whenever. Okay, thanks guys. Bye. Have a great rest of your week.